Hey, if you're looking to create financial projections for a manufacturing startup, for a potential investor or lender, and you're kind of stuck on, hey, how do I actually create a financial model for my manufacturing business? Well, you've come to the right place. We have a couple of different manufacturing templates, and today I'm going to focus on our small goods manufacturing template. I'm going to walk you through how to use this and show you how to get a financial model that's going to be good for potential investors and lenders. But first of all, my name is Adam Hoeksema. I'm the co-founder of Projection Hub. We've helped over 50,000 entrepreneurs create financial projections over the last decade, and happy to talk about our manufacturing small goods template today. So with that, let's dive into it. So this first page I'm showing you is our at a glance tab. So this is kind of the end in mind. Once you have done all the work to create your projections, you're going to get a 5-year projection model here. You can see profit and loss at a glance, some different summary data, average revenue per unit sold. You can see some key inventory numbers. You can see use of startup funds, graph form and table form, as well as some different graphs and charts. You also get a 5-year income statement summary, a 5-year cash flow summary, 5-year balance sheet summary, and then the income statement, cash flow, and balance sheet statements all broken down by month for each of the 5 years as well. So with that, I'm going to jump into how you actually input the data to develop the projections. So I'm jumping back to our input assumptions tab. First thing you need to know is that every cell that's highlighted in blue is an assumption that you can change without breaking something in the model. The other thing I would mention is that if you're in the model and you want to, you find an area that you don't need, don't delete it, hide it. So I'm going to show you real quick. Let's say you wanted to get rid of a couple of rows here. What you do is highlight them and then right click and click hide, and that will hide them, but don't delete them. That may break other sections of the spreadsheet. So with that, you can enter in things like building or equipment or furniture, enter in the value, life expectancy in years, salvage cost. So after its useful life, what do you think it will be worth? And that will help us calculate depreciation, and then what month you purchase that. You're also able to add investors up here. You can add different investors and different amounts at different times. What month did that investment come in? You can also add loans. So you can add a loan that you expect to get as well. And then we'll jump into our input revenue tab. So here you can see the way we've structured this is that you have the ability to add 10 different widgets or 10 different products that you are manufacturing. And you can enter in up to 8 individual inputs. So, wheels, doors, axles, body, packaging, labels. So you can add 8 different kind of input pieces to that total product. And so let's say you have a product that has 100 different pieces, right? What I would recommend that you do is kind of batch those into sections. So even if you think about a wheel or a door of a car probably has many individual pieces, but you can just kind of put that all into one for the model's sake and combine those input costs. And so that way we can get the entire product into 8 different kind of input pieces, right? So that will give you your cost of goods sold on the input side. And then we have this idea here of both machine minutes per unit. So how many minutes on a machine does it take to produce that product, and how many labor minutes per unit. And this will help us kind of understand our capacity to manufacture, right? So you can enter that in for your different products that you'll be manufacturing. And then from there, we have a production schedule. And so you can manually enter in the number of units you expect to manufacture each month. And you can see these are all blue cells. But then after month 12, then we start applying a growth rate to that. And that growth rate is established right here. So we have this annual production growth rate. We put that in at 100%. And so that is being applied to every single unit. So every product is growing at 100%. Now, one thing you can do is if you want to manually override this equation, what you can do is just drag this across and make all of these cells blue, and then you can just manually type in your expected production for each month for each unit, for each product. And then based on what you put in this production schedule, it's going to calculate the total machine hours per day, total labor hours per day, and the total direct cost or cost of goods sold based on those production levels. And you can enter in different limits here. So how many days per week are you operating? How many machine hours per day? So let's say you had 5 machines, or maybe, well, let's do it this way. You've got 10 machines, and they can each be run for 12 hours a day. So you have 120, 10 times 12, 120 machine hours per day limit. And that will just make sure that, that these production levels don't surpass how many machine hours you actually have available. So keep that in mind. And the same thing with labor hours. So if you only have a certain amount of labor hours as a capacity constraint, put that in here, and then this will calculate whether you're actually able to, that you make sure you don't produce more than you actually have capacity to produce from an equipment and a labor standpoint. Okay. On the labor costs, you can enter in employees, average weekly hours, average hourly rates, some growth rates there. And then the other thing to keep in mind here is that what we've done is we have kind of separated production from sales. And so just because you're producing 5,000 units of this particular product doesn't mean those are generating sales. So there's actually a separate table here where you'll then enter in your number of units sold for each product by month. So keep that in mind. And what this will do here, if you say max sales is a percentage of inventory, so what this will do is it will ensure that you can't actually sell more than 95% of the product that you have produced. This will keep you from selling more than, so in other words, if you put in, hey, I sold 100,000 of widget 6, but you haven't produced any of widget 6 yet, the model won't let you sell that because you don't have it available to sell yet. And then you'll be able to put in an average revenue. So up here, you're saying, how many units am I selling? And then this is the price per unit that you're selling those for. All right, so that is really it. The rest of these are just tables and equations. And we do have some kind of cash flow pieces here. So you can get payment if you are selling. A lot of times a manufacturer will get some payment up front, like before production starts, and then maybe some payment when production is complete, and then some payment at delivery. And so that's what you have the ability to kind of put in the timing of your payments. So if you do require your customers to pay you up front, you can, here as an example, you can put in -2. So this would say, hey, we're going to get 25% 2 months before we sell the item, basically. Or before we deliver the item, I should say. So this is months before or after delivery. All right. So now let's jump to our input other expenses tab. And what we have here is the ability to enter in different operating expenses. We've already entered in material cost of goods sold, labor cost of goods sold, but we have things like advertising or rent or insurance. The main thing to keep in mind here is that you can pick a category that you want those expenses to be in. And then you can pick whether that is going to be a fixed dollar amount or a percentage of revenue. And so as an example, you could say, hey, we're going to spend 5% of all of our revenue on advertising, just kind of as a rule of thumb. And so what you'd want to do is enter this in as 0.05 for 5%. And that would just automatically calculate, hey, what is my revenue every month, and apply a 5% advertising expense to the model. I'm going to change this back to $500 fixed. And then you can enter in salaried positions as well here. So we've got the ability to add a number of salaried positions. Again, we've already got the labor costs for those hourly production employees, but if you do have salaried employees as well that you want to enter in, you can do that here. One thing I'd point out is that you can pick what month they're going to start. So if you say, well, I'm not going to hire the supervisor on month 1, but hey, by month 25 or the beginning of year 3, we're going to hire a supervisor. So you can add those, you can layer those positions in over the years. And that really brings us back to where we started on the At a Glance tab. So if you have any questions, please reach out to us at support@projectionhub.com. We'll link to this particular template in the description of the video below. But yeah, again, reach out to us at support@projectionhub.com. Be happy to help. Thanks.